So GameStop's stock has gone through the roof in value.
Yep.
But some investors are screaming that they've lost billions of dollars. So how does that even happen? How does a stock go up and then people lose money? Well, you're going to find out in today's episode. I'm Joshua Roberts, attorney at law, and you are watching Lawyer Up. Today, we are again coming to you from Grayson Roberts' studio, doing it in podcast format.
Yep.
Today, we're going to be talking about this crazy fiasco with GameStop and their stock. We're going to talk about traditional investing versus what's called taking a short position. We're going to be talking about hedge funds, this wallstreetbets site, Robinhood, all these terms that keep getting thrown around. And we're going to look at how Elon Musk factors in to all of this stuff. So it's going to be an enjoyable episode. We hope that you like it. If you do, smash that like button for me. If you got something to say, you got a question, put it in the comment sections below. If you haven't subscribed to the channel, I'd appreciate it if you would do so now. Hit that button. And as always, I love it when you share me on social media. So with that, let's get talking about GameStop and this whole crazy
Got the stonk city on for today.
Game stonks.
So, all right, I've got a list of questions as usual here. So the first one I've got is, so social media buzz with the incredible increase in the GameStop stock value. It's programmed into my head to say stonks.
Game stonks.
I can't say it normally. GameStop stock value. Yet some people are saying that investors are losing billions. How are investors losing billions?
Okay, and that was kind of stumbled through that question a little bit, but basically, right?
It's ingrained in my head. It's on my hoodie.
GameStop
Stonks. No, stocks.
This is tough.
This is
okay. Yeah. So let's talk about this, right? So how does this stock go way up and then people lose money? So we start with the concept of a traditional investor. And this is what I do. This is, what you do.
Yeah.
A traditional investor buys stock in hopes that it goes up. That's what we want.
Yep.
Over time, we want it to increase from the price that we bought it so that we make money, right? And individual stocks, you can buy them, or like I invest in mutual funds, right? They're a group of investors. They pool their money together. And they can get more, buying power, and they can buy lots of different stocks and diversify and those types of things. And that's your traditional investor. However, there is an upside down world, right? There is a world kind of like Stranger Things. Did you watch Stranger Things?
I had the first.
They have the upside down, right?
Yeah,
well, they have that. There is an upside down to the stock market.
That's
right?
what it sounds like.
And there are people who are betting against companies. They want companies to fail. So these people want stocks to go down.
So crazy.
They are betting against the company. It's what they're doing.
That's weird because I'm a huge financial guy. I love everything fun, but the stock market's just, Wall Street's not something that I understand. I read a book. I started reading a book. I stopped a couple hundred pages in because I was like, okay, this is way over my head right now, but I had no idea that you could bet against a company. So what is it? Is that what you call it? Betting against a company? Is that the official term?
No, that's not the official term. But that's what you're doing. It's
so what's it called?
It's called selling short or taking a short position, right? So the idea is that the value of the stock is going to go down, and that you make money. And this is the thing of hedge funds, right? So they do this all the time. They've been accused of crashing stocks and essentially screwing traditional investors, people who are looking for the stock to go up. You've got this other group of people with millions of dollars, billions of dollars, who are trying to essentially make the stock value go down. So traditional investors,
crazy.
They are usually at odds with these hedge funds.
So what is a hedge fund? I keep hearing that word.
Yeah, it keeps bouncing around. So a hedge fund is basically a fancy name for a group of investors who really they have free reign to invest super aggressively, right? So a mutual fund is going to have some rules, and they're going to be more conservative because you're dealing with traditional investors, and a lot of times people's retirement funds and IRAs and those types of things. when you flip over to a hedge fund, it is super aggressive, right? They will
Okay.
sometimes borrow money and use that money to invest in the stock market. And so not only do you have the chance of losing in the stock market, but you got to pay that money back.
Yeah, that's
so you could lose,
super
you
risky.
could lose twice.
Yeah, that's wild.
And then they take these short positions, which we talked about before, taking a short position when they're going against a company. They want that company to fail. So
Such
weird.
a strange concept. So what does it mean to take a short position?
Basically, taking a short position, like I said, is wanting the stock to fail. That's probably best to describe that. Just we'll do an example, right?
Okay.
So it will. How do you make money by taking a short position or selling short, right? So let's just do an example, right? So let's use Boss Industries. That's your company. Now, in reality, in real life, it would be a publicly traded company because there has to be a market. There's got to be a market for that particular stock. But we're going to use Boss Industries stock.
Excuse me, it's stonk in this house. Boss Industries
Boss
stonk. When we're talking about
Industries
Boss
stonk.
Industries, we're talking about stonks.
Fair enough. All right. You're going to confuse me though.
Offended. No, I'm just
All
kidding.
right.
I'm just kidding.
Good stuff. So you own Boss Industries. I'm gonna have to say stock just to keep it clear, so we don't get confused. Now, here's what I do. I'm gonna take a short position. So what I'm gonna do is I'm gonna borrow 10 shares of stock from you, right?
Okay.
So I don't buy it, I borrow it, and that's important. So we have an agreement.
This is where I'm lost.
Right. So we're gonna explain it.
Mm.
So we have an agreement that I'm gonna borrow 10 shares of stock from you. And then I'm going to give it back to you at the end of our contract. Usually it's 30 days. There's short positions, there's short-term positions, long-term positions, but we're going to do 30 days, right? Could be 60 days, could be whatever. So I'm going to borrow 10 shares from you.
Okay.
And I'm going to give it back. I'm going to give them back to you in 30 days, let's say. All right? And I'm going to pay you for that. You're going to get money. I'm going to give you $5 for the use of your stock for 30 days. And it's no big deal to you because you're going to get it back in 30 days and you're going to make a little bit of money.
Yeah.
And usually it's these people are not going to change their position anyway on the stock. So he's like, wasn't going to sell it anyway. So I'll let this guy borrow it for 30 days. And I'm giving you $5 to do that. Okay. So I'm going to take the 10 shares and I'm going to go to the stock market. I'm going to sell it. And let's say it's $10 a share. So I've sold 10 shares at $10 a share. So now I have $100, right? So I got $100 in my hand.
Okay. Oh, okay.
And I've sold your shares. They're out there. And I've got $100 in my hand. And I had to give you $5. So right now I'm ahead $95.
Okay.
$95 here, right? So from there I don't have to worry about it for 30 days, right? I got to give you your shares back in 30 days. So the hope is that stock price goes down in those 30 days. So I sold it for $10 a share. Now, if the stock goes down to 9, 8, 7, the stock value goes down. So at the end of the 30 days, at the end of the 30 days, I'm like, I got to give you your shares back. So looky here, the Boss Industry stock is trading at $5 a share. So I can buy those 10 shares back for $50.
So half the price.
So yeah, because it's gone down. So I give them $50 and they give me my 10 shares, right? And then I'm like, hey, I owe you 10 shares. So I give you your 10 shares back, right?
Okay, I got it now.
And
that makes sense.
Yeah, and so then I have netted $45 because I basically got 100 when I sold them for $10 a share.
Yeah.
I had to give you $5, right?
Yeah.
And when I bought them back,
I
bought them for $5 a share. So it is crucial that the stock value goes down. When you take a short position, the stock value has to go down.
Yeah.
The bad thing, if you take a short position, is if the stock value goes up. Because, right, I've got my $100 here, but in 30 days when I have to give you your shares back, if it's gone up to $11, $12, then I've got to buy that. So that's $120 I've got to have.
Yeah.
So I have lost money if the share value goes up. And so that's
risky business.
That's the situation there. So you're really betting on the company failing. And so that's how you make money.
Wild.
When you have a short position, and hedge funds do this all the time. They find a business that's struggling, and they've been accused of when they take a large short position, in the stock market of crashing stocks, of making businesses fail, screwing. Screwing traditional investors. So they're just like, hey, we want the value to go up, but they've taken a huge short position, bought up a lot of the options, or they borrowed the stock, right? And they've taken their short position, and it's caused a lot of companies to actually go under, which is great for them.
Yeah.
If the stock is basically worth nothing, then they've made all that money.
That's crazy.
So that is what hedge funds do. So
why would I let you borrow 10 of my stocks if you're like, they're going to go down? Well, I'm confused on that part now.
Well, you wouldn't, unless, if you were going to sell them or whatever, you were going to do something, you wouldn't. But if you're just a lot of positions, I've got my mutual fund I've been in for 20 years. I'm not going to change my position anyway. So you could I'm going to let you borrow my shares, and you're not betting against the company because you want it to go up in value. So you have a different position. But you're just going to let, you're going to get $5 for letting me use your shares for 30 days. So it's easy money, right? So people will
But then I would be like, well, why do you want my shares?
Well, it's just it's options trading. It's kind of its own world where people do that. Some people do, some people don't.
I don't know why you want my shares.
No, not necessarily.
Sounds kind of shady. Short selling sounds kind of shady.
There's a whole world of options, and there's different types of there's put options and different types of options. We're not going to get into all that today, but it's this whole world where you are actually betting against the stock market. You're betting against a particular company. And people say it's basically gambling. This is basically using the stock market as your casino.
That's exactly.
That's what people have said about that. And so
that's what I've heard too.
So the moral of the story is, for these people who have taken a short position, that if the stock goes up, that's bad news.
So what does that bad news mean?
Well, something in my eye there for a second. The bad news means if the stock value goes up, you're going to have to pay more money.
Yeah,
I had $100 here.
The guy doing the shady thing,
yeah,
he gets bit.
Right.
If it goes up.
It goes up, and I don't know if it's shady or not. It's hedge funds do it.
Yeah, I don't know.
It's weird.
I'm sure it's legitimate.
It's legal, but
I'm sure if it's legal, I'm sure it's legitimate. But it just seems like such a foreign concept to me.
It is. It's strange. It's why everybody's so interested in this whole thing with these hedge funds.
Super fascinating. Yeah,
and GameStop.
This is great. So, how did these hedge funds get involved with GameStop?
So, when we're looking at this specific instance of GameStop, right? So, it is a brick and mortar video game store, right?
Oh, I used to go there all the time.
And used to. That's the key word, right?
I can't believe they're still in business.
They are.
I really can't.
On the verge of being obsolete, right? So we've got.
Doesn't sound like it.
Well, not now.
It doesn't sound
right?
like it. Yeah.
Not now. So with virtual everything, we're downloading games.
Yeah.
If you want
I
a
buy
new
all my games on the console.
Yeah, if you want a new console, you've got eBay, you've got Facebook Marketplace,
Amazon.
You can cut out the middleman. You don't have to go to GameStop, and so they weren't doing well. They were probably on the verge of going under, and probably still ultimately will. However, these hedge funds looked at GameStop as a vulnerable business. So
they were going to short sell.
They were taking. Whoa. In fact, we're going to get into that. They did. That's exactly what these hedge funds did. They saw GameStop was trading in early January at about $17 a share. And these hedge investors said, hey, we're going to take up a huge short position with GameStop. And they did. They bought like 100% of the shares that were available. They borrowed, not bought, borrowed.
Borrowed. That's the key, right?
That's the key word. You don't want to buy them, right? So they were absolutely 100% in on bankrupting GameStop, and they thought that was what was going to happen. So they took what they said is 100% position, short position on their stock, their available stock. Now there's still some stock out there to buy, which we saw because that's how the thing skyrocketed.
Yeah.
So not many though, and that's kind of another part of the deal is that there was only a limited number of stocks to purchase, and these people, they have to give back the stock at the end of the option, so they're going to have to be able to purchase it. But the market was very, very dried up at that point as far as there weren't a lot of shares available. So here's what happens. A savvy group of day traders noticed that, hey, these hedge funds are all in on GameStop. And they figured, hey, if we can make the value go up, we can basically screw these hedge fund people, right? So these traditional day traders and people who are in the market in a traditional setting, they don't like hedge funds. They don't like people that play the opposite way because it's the opposite of what they're doing, right?
Yeah.
So and we saw that podcast with the guy that kind of was behind it, and he's like, there was no guarantees this was going to work. We're just going to give it a shot. So after he and some of his buddies, they purchased stock in GameStop. They kind of shored up their position. Then they told everybody else about it on social media, and they had it on Reddit. Through Wall Street Bets. That was the page. It has over 2 million followers. So they put this out here. Hey, here's what we're trying to do, right? And it caught on, and it caught fire. And then they put it on national media. They put it on the news. And so everybody sees about this. So with a limited
huge deal.
It's a big deal. It's not been done before. This has not really happened.
Wall Street history.
And so were such a limited number of shares available that when the buying frenzy kind of started, they gobbled them all up, right? So GameStop's stock went from $17 a share just earlier this month. Yesterday, it was January 28th. It was at a high of $490 per share, right? That's crazy.
Wow.
From $17 to $490 a share. Now it fell to closer to 200 by the end of the day yesterday, but at that point in time, that's an insane jump. It made national news. In fact,
that's insane.
You've heard that Robinhood, the trading site, that's the app where you do make your trades through there. They suspended trading yesterday. It was so
that's a whole big deal
crazy.
In and of itself.
They stopped. You can't buy any more GameStop stocks. And of course, now Congress is like, what in the world? You can't do that. You can't just shut down trading through your site on a particular stock.
Can you sell your GameStop stocks?
Yeah, you can absolutely
through Robinhood.
And people,
they're not like completely freezing it, so you're stuck wherever.
Well, they froze
it
yesterday. It's reopened today.
So you can't. As of yesterday, you couldn't sell.
You couldn't do either one.
That's dangerous. That is screwed up.
Through Robinhood. There were other sites that still allowed trading, but through
I don't use Robinhood.
Yeah, a lot of people do, but they stopped. And now Congress is like, hey, we're going to look into this. You can't just. And so here's the weird thing about it. When they stopped,
I heard about
trading,
the whole Robinhood thing.
Yeah,
That's
when
crazy.
they stopped the trading, the stock price crashed. It went from like crash. It's a relative term when you're up at about $500, but it basically fell back down to like $200. And so there is some people looking into it. Hey, were they influenced by these hedge companies? Did they get a hold of them and say, hey, we're losing billions of dollars here. Stop trading. It falls. And then they can buy. Because basically at this point, I told you it's bad when it goes up $1 or $2 and you have to come up with $120. Imagine it going when you're in a huge 100% position like that. You've got billions of dollars invested through these various hedge funds. And imagine it going from 17 to 490. They basically said $3 billion we're going to lose. We're going to go bankrupt.
That is insane.
And that's what they were saying. They're crying foul. And of course, the people that are traditional lenders are saying, "Screw you! You've been screwing us for years.
Yeah,
you finally get it."
Jeez.
And it was just a bunch of day traders, some young guys and girls, right on that Wall Street Bets that basically fueled
insane
massive sinking of a hedge fund, multiple hedge funds that were taking short positions. So it's just a crazy deal. And it is, like I said, people said they've never seen this before. Didn't really know it could happen.
Insane.
It's just the power of social media, the power of being able to communicate with people all over the world, the power of, and obviously when it was on the news, by that time it was already kind of underway, right? Mm-hmm. So it was already, going up. And so some of these, what was kind of funny about it, well, unless you're a hedge fund. So they saw this going up and they're like, we better stop the bleeding. We need to we're going to buy this back. It's bad enough now. So if you're, like we talked in our example, if your stock is at $11, it goes up. You're like, oh, $12. Oh, you're like, how high is this going to go? I'm just going to buy back now at 12 because I don't know how high it's going to go. I'm going to cut my losses.
I was going to say, did they just not?
So no, they did.
Okay.
So
pretty early on,
they
I
started.
assume,
Well, some of them did, some of them didn't. But what the funny thing is, because their position was so strong, they had what they said 100% borrow position, short position, that there weren't a lot of stocks to buy. So when they bought them, it was, there's a limited number. And because there was such demand with such low supply, they actually fueled the additional increase of the stock value.
Really?
Because they're trying to buy huge amounts of the stock, and it's not there. And so it even further, supply and demand, right? They it's like throwing water on a grease fire, right? It doesn't put it out. It just spreads it everywhere. So they just actually caused, in moving that quickly and trying to basically stop the bleeding, they caused an additional kick up of the stock price. So it's
bad day for those guys.
Real
bad day.
A historically bad day for those guys. So that's why the hedge fund people are screaming. They're saying, well, this isn't fair. You shouldn't be able to do that. And of course, that's what traditional investors have been saying about them for years.
Yeah.
So it's revenge. I mean, that's what they use social media and this investment strategy for revenge. It's a $3 billion fiasco. It's very interesting.
Wow. So how did I love this guy. How did Elon Musk play into all of this?
Oh yeah. So
as you answer this, I'm going to pour another cup of coffee.
Well, go ahead, get it. So
I got my mic over here.
Oh, okay. In case you have something to say off camera, it's following you over there. It's kind of weird. So anyway, Elon Musk, obviously he's the CEO of Tesla. And if you know the history, hedge funds took a short position in Tesla a few years ago and caused his it caused
he used to talk about how he said it was like weeks from going bankrupt.
Yeah. I mean, it caused him, he lost a lot of money. Now, a lot of money to him is, billions of dollars. And obviously Tesla.
He's worth almost $200 billion.
Right. Tesla has come back super strong. But there was there was a time when Tesla's stock wasn't all that valuable, and they had taken a short position thinking that these cars were not going to make it. This is a failing business. We're going to take a strong short position in Tesla, and it caused him a lot of problems, a lot of financial problems. Obviously, he bounced back, but
he sure did.
So he has zero sympathy for hedge funds. He has zero sympathy for people who are out there trading with the intent or the hope that a business fails. So he is not a big fan of what those guys were doing. And he is a big fan of what the day traders were doing.
Oh, first of all, he loves memes. Second of all, he hates hedge funds. So
there you go. It's exactly right. So he is the CEO of a publicly traded company, and they have rules. They can't say, oh man, we're not having a very good quarter or stuff like that. They can't say that, tweet that, because there are rules about disclosing financial aspects of your business. You have to do it in a certain way. So he can't publicly comment on Tesla or any other publicly traded company.
So a while ago about that, he tweeted, I had it in my Elon Musk podcast. Probably didn't see this highlight, but there was a point where he tweeted, and what was it? Tesla's stock price is too high in my opinion.
Yep.
And then someone responded to him. He's like, MF, I lost 10K because of this tweet. And it went down because of that.
Yeah,
I heard he got
fined.
in trouble. Yeah.
That's exactly right. He got fined for making that exact comment.
Twitter thread. Dude, I lost 10K because of this tweet.
And he did, because you can't do that. So, you can, obviously he did, but there are consequences to doing that. So he knows he can't comment publicly about a financial aspect of any publicly traded company because he's the CEO of one, right? So
that's interesting. I didn't know that either.
He can't say, hey, guys, go buy GameStop. GameStop stocks, right? He can't say that. Or don't buy it. He can't say it either way, right? So he can say game stonks, which is his tweet, right?
Yeah.
So game stonks means nothing. I mean, it doesn't mean anything. That's what he put on Twitter. But it means everything. right? Everybody knows exactly what he's talking about. He's
Game
talking
stonk.
about GameStop.
I need to make Game Stonk merch.
Yeah, exactly. So without saying anything, he says everything, right? So he's
Yeah.
encouraging these day traders and these people that are buying this stock without saying, "Hey, screw hedge funds." He doesn't say anything like that. He just says game stonks,
Loophole.
which is awesome. So it's just a great story.
He remind me after this. I got to show you. Never. We'll talk about it later.
Okay.
But anyway, so where's
We're in the middle of something here. You hadn't noticed.
Yeah.
All right.
So where's the game stonk at now?
Right.
Where's its
GameStop.
value?
Right. So
I'm not going to try to say
right.
whatever.
Right this second, I couldn't tell you. Yesterday, January 28th, it peaked at $4.83 a share. So that's basically $490.
Jeez.
When it was $17 a share just this month, earlier in the month in January. It's low yesterday, and after they stopped trading, it dropped down to $112 per share. So it dropped, it's dropped $360 in one day, and then bounced back, and it closed.
So it's at right now. It's at 287.
287. Okay, there we are. $287
The
a
high
share.
looks like 413 today.
Holy moly!
Is that today? Is that high and low today?
Yeah, that's exactly right. That's the high and low today. So it shot
Oh my
back
God,
up.
it is.
Oh
my God, look at this.
Continues.
Look at this.
I mean, it is continuing.
It dropped and it's back up.
To show the camera.
Wow, I've heard. So
I don't know if
here's
they'll be able to see it.
No, they will. Here, okay. So I'm going to show you. Here is the 1 month. You can see the spike, the fall, and it gets back. I've heard people have made. This is a pretty important to see. What's the date today?
Today's January 29th.
January 29th, about 1 p.m. in the afternoon. That's wild. It's at 286 right now. Man, today's been a crazy day.
Nothing's ever happened like this before.
Wall Street.
I've seen things fall.
Insane.
They usually don't shoot up like that, but it's one directional. It's not a ping pong like that. That's just.
I've heard people have made millions doing like.
There's a bunch of college kids said they made enough to pay off their student loans and stuff like that. And so
that sucks.
It's a risky
deal. Can't even do anything fun with it.
Right. Well, I mean, they can do whatever they want with it, I guess. But it's obviously it's super risky deal.
Jeez.
Because yesterday it ended at $193 per share. So the fact that it's at what now?
286.
So it's bounced up basically $100, but it was much higher than that earlier in the day. So there's just no telling. So I wouldn't be buying when it's up in the 400s. And at some point in time, this thing's going to go back to reality.
The thing
right?
is like, I'm afraid that some people are going to try to make a quick buck, but then an hour shifts and they lose everything. You know what I mean? They lose everything they put into it because today at 400, someone could have bought in at 400 thinking, oh, it's going up, and then it cuts in half.
Yeah. I mean, you lose half your money, right?
Dangerous.
So
it's gambling. 482, it's going down now.
The reality, I mean, we could get on there and buy it right now. But this morning when I saw it said, it's opening at $193, I'm like, oh, I'm not going to buy it now. It's going to go down today, right? I'm not going to get in the middle of this now. But it didn't. It gone up. So there's just no rhyme or reason. Hey, if you can figure out the stock market, you'll be a millionaire. I mean, a billionaire, right? Nobody's figured it out yet. And this is just one of the craziest manipulations and Robinhood is that's kind of a funny name. Robinhood he would steal from the rich and give to the poor.
Yeah.
And that is a little bit of what's going on.
Now I can monitor it all day on my watch.
There you go. It's good to know. So, but anyway, that's the story. Everybody's been like, what is going on with GameStop? And that is the ins and outs of what is going on and what had happened in regard to this. And it's an ongoing story. So it'll be interesting to see as it moves forward how it all fleshes out.
Yeah, it's crazy.
I enjoy the fact that I'm not financially tied into this.
Yeah.
So it's fun to watch.
It makes me want to put that amount in there just to see what happens to it.
Yeah, we can buy one share.
Should I buy a share?
Well, do you have $293?
I have 200. I have $300 I could lose.
Yeah. I don't know. It's up to you.
We'll figure this out later.
All right. That's good. All right, man. That is the episode. I hope that you enjoyed it. I hope you understand this GameStop thing a little bit better than you did before.
Mm-hmm.
You understand traditional investing versus taking a short position. We've talked about hedge funds. We talked about Wall Street Bets. That's on Reddit. Robinhood. We've talked about that site where you can do your trading. Elon Musk. We've covered all those things today. Tried to explain it the best that we could. Hope that you have enjoyed it. A special thanks is going out to Kevin Easley. He's my law partner, and he explained a lot of this to me. He's a finance guy, so appreciate to him. Remember to like, comment, subscribe, and share me on social media. You guys have been watching Lawyer Up. My name is Joshua Roberts. Thanks for watching.